Okay, so an example would be December the 24th. They paid Parker a check of $320 to settle total amount owing less 10% cash discount, meaning to say there is a cash discount of 10%. Okay, so 10% of $320 is actually $32 of cash discount. Okay, if let's say you are purchasing, you are buying goods from a supplier, you receive a discount, it will then be a discount received income. It'll be a good thing, right? Okay, so it's like a discount received income. Okay, and what do you actually need to pay for? It's actually only the remaining 90% of $320, which is $288. How you do the double entries? It's simply, okay, because this amount is actually to fully settle this $320. So you actually owe Parker $320 less. So it's debit, trade payable, Parker $320 less. Okay? And what is for credit? Okay, your credit will then be out of the $320, you will need to pay 90% of it, $288. So therefore, cash at bank will decrease because you're paying it out. And because it is an income, a discount received income, okay, it will then be credit, discount received, $32. Okay, how you map this into our accounts? First, we look at our trade payable account. Okay, that's an existing one already. Okay, and if you look at the opposite of trade payable Parker in this double entry, it's actually the credit entries are actually cash at bank and discount received. So we need to capture these two. Okay, so on the 24th, cash at bank is $320 times 90%, $288. Okay, so reduce. Okay, so it's like 3,600 of existing balance. You minus away 288 will give you a remaining balance of 3312 credit. And on the 24th, you also receive a discount. Okay, you also received a discount. Okay, and because your trade payable actually decreased by $32. Okay, so meaning to say your balance will then be 3312 credit. Okay, you minus away 32 will give you a remaining balance of 3280 credit. Now, because 24th, once you settle this payment, okay, it is actually the end already of this month. Okay, let's say it's the end of this month and you want to close it. Okay, how do you actually close it is because trade payable, okay, is a liability, you have a balance brought down. Okay, so you draw a line to indicate it's the end of that period. 2014, 1st January, you have a balance brought down of the last figure here, 3280 credit. Now, another account here that we see is actually our cash at bank account. Okay, our cash at bank account, okay, on 24th December, actually decreases by 288 because you are paying for the goods you have bought. Okay, it will give you a balance of 288 credit. Okay, and it's trade payable Parker account. Okay, now we move on. Okay, so to give you a better look is this cash at bank 288 credit account. Okay, now we move on to our discounts received account. Okay, now for our discount received account, because it's an income, so when it increases by $32, it'll give you a balance of $32. Okay, the opposite of this credit entry is actually a debit, trade payable Parker, 320 times 10% on December 24th. Okay, to close a discount received account, being an income, it will go into profit and loss. So you want to transfer everything to profit and loss, you debit 32 to give you a zero balance.